All right, quick look at the stock market today. I wouldn't say much of this is from the debate last night. It was up and down. You know what it was? Nike had terrible earnings, which seemed to drag everybody down. The Dow ends up on the day down by 45 points. The S&P 500 down by 0.4%. The NASDAQ down by 0.7%. So not a lot there on the debate, but such as it is. All right, let's talk here about the economy a little bit as we welcome in Greg Ip, who's the chief economics commentator at the Wall Street Journal. Greg's always good to see you. Thank you very much. I think you wrote what was a very, very interesting piece the other day about housing. And it caught my eye because maybe it was just because of the headline, but it's saying to people who are looking at the housing market right now, you might be buying your house right at the top of the market. Tell us what's happening and what people should know.
Well, everybody knows there's an affordability crisis out there right now. I mean, houses are really expensive and mortgage rates are really expensive. So if you're a buyer, that's definitely a bad thing. If you own your house, you're sitting on like a 50% gain in the last 4 or 5 years, which is pretty good. But the flip side of that is that it kind of is making the housing market look kind of overvalued, Connell. And, you know, houses, you can compare them to stocks in the following sense. You look at stocks compared to earnings and you ask yourself, is that ratio sensible? And with houses, we can do the same thing by comparing them to rents because, you know, owning and renting, they're close substitutes. And housing prices have gone up 50%, while rents have only gone up 25 or 30%. So it's kind of looking out of whack. And if you look at a variety of models, including one that's developed by the Federal Reserve, they are the most overvalued since the peak of the housing bubble in the mid-2000s. So I guess at a minimum, it looks like a bad time to expect significant appreciation in your housing wealth going from here.
So what does it mean then if you've owned your house for quite a while and you're thinking about some sort of a transition, or, you know, there's a lot of people in that zone that think about either downsizing or they're thinking about moving to rental or they're thinking about cashing in on their home. Now, what would you say to those types of people?
So I think the situation with housing prices presents different challenges depending on your position. If you're thinking of buying a house, look, I don't want to scare anybody out of buying a house if they really need a place to live, to raise a family and so on, because first and foremost, your house is a place to live. And for a lot of us, it's now a place to work. And if you plan to live there for a while, then you need to then go ahead and make that big decision. But if you're thinking first and foremost about capital appreciation or preservation, and if you're thinking of moving or selling or downsizing soon anyway, I guess what I'm saying is the timing is looking pretty good right now. With the caveat as follows, that valuation is a lousy device for timing the market, deciding exactly when to buy or sell. It's the same in the stock market. Stock market can stay overvalued for a very long time. The housing market can stay overvalued for a very long time. And it's possible that you could justify today's prices if, for example, rents go up a lot or interest rates go down a lot. I don't think either is that likely. So I guess what I'm saying right now is that if you're thinking of selling, now is probably not the worst time in the world.
Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.